Good morning and thank you for joining us.
Good morning. Can you hear me now?
Perfectly. I'd like to kick off with a price action. What's driving the price action today? Yesterday we saw a major tech-driven sell-off, so I was wondering whether we can see a sustained bounce back today.
Yeah, it's probably a bit of a bounce back from yesterday's price action. As we say many times in the past, these trading sections are quite choppy at the moment. Market participants are trying to understand two things particularly. First, whether reopenings are going to be permanent around the globe, or rather the incoming autumn season will bring new closures around the world due to COVID, the Delta variants, other variants, and so on and so forth. Secondly, what central banks will do, and we know that given a bit of a slowdown in growth in a number of economies, including the US, central banks are keeping their cards close to their chest. Third, if we want, we can add the additional element of the supply bottlenecks that are having an impact virtually everywhere in the global economy, and therefore you tend to have days in which market participants tend to be more sensitive to those kind of news. Today seems to be a bit of a bounce back compared to yesterday.
I was wondering, how do central bankers find the balance between slowing growth and inflationary pressures to the upside, which looks like are going to be more persistent than expected?
So central bankers are facing this stagflation, let's call it that way, dilemma, if you want. It's not as bad as it could be or as it has been in the past, but clearly is not a favorable position for central bankers to be. Clearly they tend to work on time horizons. They tend to act on whatever comes first, or what they believe is going to be more persistent. At this stage they believe that it is much more important to get the growth going, and inflation is temporary, so they can effectively wait for these temporary factors affecting inflation to wane off and focus on the pickup in economic activity, making sure that it remains as robust as it has been in Q2, Q3, and so forth. However, it is true that inflationary pressures are proving a bit more persistent than initially anticipated, this is mostly due to these bottlenecks and this disruption in supply chains that I was mentioning before. And some central banks are starting to talk a bit more hawkish. We saw the Bank of England later in September, and other central banks already talking a bit more hawkish. Whether they will act on that is another element for discussion. I don't think they will. If they need to reassure market participants that they are there to preserve price stability at any cost, and that they will be ready to act. But they also know very clearly that if to act too much too soon, they will endanger economic activity and the recovery, and therefore that would then cause further damage even to the inflation outlook.
I was wondering, how do we have to interpret this way stronger dollar index compared to where it was, for example, just 2 months ago?
Well, we know that the Federal Reserve has been one of the first central banks in making it clear that it's on its way out from the removal of emergency measures adopted during the crisis. Not really the first one, because others have acted even sooner. We saw Markets Bank that in fact increased interest rates. The Bank of Canada that tapered way before the Fed. But these are smaller central banks. The Fed is such an important element in the overall puzzle of the global economy, that whatever it does, it carries a weight on markets. And so we shouldn't be surprised of seeing the dollar having strengthened in the last few months against the major currencies, because since Jackson Hole in August, it's kind of clear that tapering will begin later this year at the latest, and therefore that monetary policy is going to be in the US is going to be tighter than other central banks in comparison. And what really matters is the relative degree of tightness. The Bank of England, as I said, acted later. The ECB has just recalibrated its PEP, but Christine Lagarde was very keen on saying that the lady isn't tapering. That's the expression she used herself during the press conference, meaning that they're not even at the level of start considering tapering. The Bank of Japan is in fact still providing full accommodation. They just launched their green loan program, and so on and so forth. So clearly the Fed is ahead of the game among the major central banks for sure, even among some smaller central banks, although the real difference in the past, if we consider the dollar index that you mentioned, is that the emerging market central banks have in fact acted before the Fed. This is not what happened in 2013 to 2014 when we had the taper tantrum that caused really a bloodbath in emerging markets. In this case, most emerging markets acted before the Fed to avoid the kind of withdrawal of liquidity and withdrawal of funds from emerging markets that we observed in 2013-2014. In fact, some of them have already increased interest rates, in some occasions even more than once, way before the Fed will do. So somehow they protected themselves. So that's the real novelty. But all these emerging markets don't carry much weight on the dollar index. Dollar index is mostly dollar yen, euro dollar, cable, and so on.
I want to touch on very quickly on the debt ceiling, which appears to be a problem in Washington so far. There must be a decision until 18th of October. I was wondering, do you consider it as a risk for markets and risk for US economy at this point, or it's too early to say?
We have been there before many times. It's
Yeah.
actually quite depressing that all the time the US Congress has to get to the very last minute for their partisan fights. Effectively, that's the reason, before either extending the debt ceiling or pass new budgets and so on and so forth. It's just partisan fight. It's nothing to do with the government. We have seen shutdowns in the past. In these occasions, the president avoided at least a total shutdown, but in the past we saw government shutdown, which, for the major economy in the world is really not a good example to set for everybody else. The debt ceiling is nothing but the result of expenditure measures being adopted in previous years. So there's nothing new. It should be effectively an automatic measure to be adopted. But the reality is that politically is always too advantageous for one part to try to put the president in charge in a difficult position, as it generally happens. Not a nice show to watch if you want, but eventually I don't think it would really pose a threat to the durability or the strength of the US economic recovery. As I said, other factors are at play. These are supply bottlenecks and potential variants from COVID, much bigger impact than any dispute on the debt ceiling.
And final take, which is certainly, this is the week of the jobs reports in the United States. We're going to see jobs data on Thursday, and of course the non-farm payrolls on Friday, which generally is a major market mover. What are your expectations, and do you think that the NFPs might be, how can I say, important for the upcoming Fed meeting?
Yeah, I mean, in terms of expectations, we know it's a lottery because it's always a question of the revisions of the back months. So we saw some pretty below consensus reports in the previous months. Last month was okay. So we are now in the whatever 500K mark, more or less. Certainly we are not going to see the million that we saw during the summer in Q2 and so on. This is not the kind of stage in economic recovery in which you can see these numbers, but still you can see some pretty decent figures. Now, will the Fed look at this very carefully? Yes, and Jay Powell was very keen in saying that that was the case, but then he was also keen in saying it just expect some decent, he said decent employment report. It doesn't need to see something stellar or spectacular. You just need to see a decent employment report to go ahead with the plan. So if he remains in line with expectations this time around, I think the Fed then can announce its tapering in November as somehow expected at the moment. Clearly, if we had to see a disastrous employment report, which is kind of out of consensus and I don't think it's going to happen, but if that were to be the case, the Fed would be prudent and postpone until December any announcement on tapering.
Thank you very much, Bruno Rosa, CEO of Rosa & Verbini Associates. Thank you so much for joining us and have a great week ahead.
Thank you very much. Have a good week. Bye-bye.